All right, so we'll be talking about liquidity today. If once your background is noisy, you can just mute yourself to allow others enjoy the call. I don't want to mute all of us. This is a mentorship team call, so we get to talk, we get to discuss, we get to ask questions, and then we can all flow along. This is not a general call; it's a mentorship team call. So now to be looking at market pattern, and I want to dwell on internal and external liquidity. This is very important because is the music okay? Or you want me to bring it down?
Bring it down, sir. Sir, bring the music down.
Yeah, so your audio is not so clear with the music.
Let me see if I can one. Is it okay, or I should just shut it down completely?
I think it's better if you shut it down completely, sir.
All right. Okay, so that will be it's okay.
Yeah.
So let's go.
Okay, thank you,
Market
sir.
pattern. I want to talk about internal and external liquidity. I've said it over and again that the forex market is built around liquidity. It's engineered to move that way. So smart money wants to make orders. They need liquidity to be able to push their orders because they are not opening this 0.1 lots. We are using 0.02, 0.003 micro lots we are using. They trade large lots. Whatever we're teaching here is also applicable to currency. You only need to just add time and price, that's all. So smart money doesn't trade the way we trade. We are called retail traders because we have $100 account, $10,000 account, even a $50 account, $50,000 account. You are still a retail trader. You don't move the market. Your position cannot make price to buy. Your position cannot make price to sell. So smart money engineers liquidity by building orders. They want to fill orders. Let's assuming they want to have an order, they rallied up, and then they want to keep pushing price up. They will need to inject more orders into this place to take out these previous sellers. So this is now your liquidity. They'll need to like put in, let's say, a $10,000 here, for instance. And then when they come to this place, since they want to move market upward, they know that retail traders are all in this angle selling. So they want to take their money to fill in their orders. They might just come and inject like 50,000 orders here. So this 50,000 orders is greater than the $10,000 that is here. $10,000 which they imputed here, plus retail traders, people are selling around this place. They have their stop losses around here. You know, stop losses is money. That's liquidity. They have people are waiting for maybe if price breaks above, then comes to retest, they will buy. So there are a lot of buy orders here, buy continuation, and all these orders that are here. Sellers are here, buyers that are here waiting for a breakout and retest. You know, those kind of teachings you have on YouTube. So those orders, let's say everything now is around $20,000. Why they come here to impute like $50,000 or $100,000? So they move the price in their direction. So why they put $50,000 here? The reason is to take out everybody that is here. So they take out all the stop losses here of about $30 added to their position, and they are running in profit. Now their position that was open here is in drawdown. So they are still coming back to mitigate. So when they get to this place, they come back to mitigate 50%. While retail traders are waiting for that last candle, they just come touch 50% and off they go. So the market is engineered by liquidity. That's just the concept I want us to start with. Liquidity is what moves the market. And liquidity, if I want to define it, liquidity simply talk about your entry, your stop loss. Entries and stop losses of retail traders. That's basically liquidity. This is what the market runs on. So today I want to talk about internal liquidity and external liquidity. External liquidity is always at the direction of the trend, while internal liquidity is to be captured for an entry. I'll give you example just here, and then we'll go to the chart. So let's see. All right, let's say we have a bullish market, as you can see, and then price comes. Remember that a low is valid when a higher high has been created in the bullish trend, vice versa in the bearish trend. A lower high is valid if a lower low is created. So now price comes here. You don't know the high yet because price is still here. Until price starts retracing, that's when you can now bring out your feet to know the top range and the down range. But for now, price comes and give you something like this, and then price goes up. This retracement here, if it didn't get to the 50% of all of this move, there is the possibility that it is internal liquidity. So price comes, captures it, comes to the 50%. When you think price should sell from here, you take this as a break of structure, but when you now think price will sell from here, price comes and blasts through. It's simply telling you that that first move was internal liquidity. That first move was internal liquidity. So internal liquidity is always within. Price creates internal liquidity, which they intend to capture and then come to mitigate 50% of this move. Remember, don't forget, they create it because they want to ensure that retail traders get in. Retail traders get in. Remember, we are looking at 50% of this. So internally, they can create a move like this, and then they will now trade back to break up, clearing you that wants to sell. We have seen all these examples throughout this week. We have had markets make all these moves, and I felt it's necessary I teach this. We look at this so that we understand market patterns, how liquidity draws the market. So they take out internal liquidity. I'll call this my internal liquidity. Please pardon me. I'm just trying to, I'll make sure this is very, very short and brief, but I'll just try to give you the source. Yeah, let's go. All right, let's put it to right. Okay, I think it's better that way. So this internal liquidity, and then price comes start now into the 50% and goes up. So the rule of trading liquidity is that once internal liquidity is captured, we head to external liquidity. Is captured, we head to external. Let me put it like that. That's too small. Can you see that?
Yeah, we can see.
Okay, fine. So this is the principle we use in trading liquidity. Want to wait for internal liquidity to be captured. Let me put this as points so that you be able to understand it. Internal liquidity to be captured, then we head to external liquidity. So we use internal liquidity, we wait for internal liquidity to be captured before entry, and then we head to external liquidity. This now becomes your external liquidity. Previous highs and previous lows. External liquidity is simply previous highs and previous lows. External liquidity. Money is seated there. Previous highs, previous lows. That's external liquidity. Okay. No, let me make it 12 red. Yeah. Just trying to see what I can make it out. Okay. External liquidity. We have external liquidity is captured is the previous structural point in the direction of the trend. You can watch the video over and over again. External liquidity is in the direction of the trend, the previous structural point. You know that when price gave us this low, if this was our low range, this was our down range or range low, the next high, this was the top range, the range high. So if we are trading within this range, price has given us a low, a high, a low. All right, sorry, this was the last one. Sorry, this is the last one. So we have this, and the price comes, and this is the last high. If this is taken, once price comes straight back into this place, so if you get an entry here, you know now that this is where price is attracted to. This is where money is seated. Previous sellers are here. So price is going to do all of this to go and take external liquidity. So once internal liquidity is taken, we now have permission to take external liquidity. That's how it moves. That's how it moves. That's how market moves. So if we are bullish, the high is the external liquidity, while internal liquidity is always before the entry. Always before the entry. Like always before the entry. Internal liquidity to be taken for entry, external liquidity as target. So you have an entry here, you want to target the highs for your take profit. That is the concept of liquidity. So if we are bearish, this is what will happen. We have a high, a low, a higher low, and price can give us this, created this liquidity and broke. So this becomes a range low, the range high. Then price will have to come in, clear this internal liquidity, and then we trade down. Now the question you would want to ask is, how do I identify internal liquidity? To identify internal liquidity, you need to find, you need to draw your feed. If it is not up to, if it's not below 50%, it is not liquidity. The liquidity that you should expect to be captured for entry is a liquidity below 50%. Check this. This is 50%. So once it is here, know that it is a valid internal liquidity. It's going to be captured, and then we get entry below the liquidity. I'll take you to the chart. So just draw out your feed, and then you want to get entry at the 50% of this, the 50% of this move. That's where you're getting your entry. So price will come, if you draw your feed from the low to the high, then any smart money move that created the last high is always your internal liquidity. It creates it before market retraces. So we had a lot of troubles today with Boom 1000. We're looking to sell here, and it was just internal liquidity. Price came, reacted here, people entered, and then it cleared everyone. Then we later came down for the sell. Meanwhile, people are taking losses, people have left the stage, and you want to take price from all of this. So liquidity that is valid internal is always the one below 50% fib level. And external liquidity is the high. So if price is bearish, in this formation, this becomes your external liquidity. You get an entry from this lower high, and then you come to a lower low, this becomes your external liquidity. You get an entry around this place, this becomes your external liquidity. You get an entry here. So external liquidity is always the lows while coming down, the previous lows. The previous lows. These are your external liquidity. All the previous lows. These are external liquidity. Previous lows. In our next market pattern, I'm going to teach about how structural points becomes liquidity. we're going to talk about that. But let's just look at internal and external liquidity right now. So we're going to have something like this. It's a short call, so let's go to the chart. Let me just show you one or two examples, then I'll give you time to ask your question. All right, this is this 25. I've been trying to buy this asset, but I discovered that I was trading it wrongly. This is what I was looking at before. Price was going this way. Price was bullish on this retracement leg because on the daily, we are bearish, super bearish on the weekly. So I was waiting for price to come to all of these. See how price gave us this sweep of liquidity, captured that liquidity, and gave us this. So I was looking at price should come to all of this. But that's not correct because while price was coming down, price gave us this high, this low, this high, this low. They are structural points. This high, this low. So all of these, that's where price came to react. Yes. I'm expecting price to come to all of this, and price came to that point. There was a smart money cube here. You can see it clearly. Price came to that smart money cube, and then we had a break on a lower time frame. So let's see what we should just be looking at being bearish. But let me spot out the external liquidity and internal liquidity for us. So if I take my feed from this is the range. Range must be established. This is the current range because price broke all of this structural points. So this is the range from the high. I take my feed to the low. This is the last low for now. You see price came here to the 50%. So this is liquidity for me. Price came here to the 50%. So this is internal liquidity. Internal. I think I should put internal in the front. This is internal liquidity to be captured. And then there's a smart money cube here I am looking at. There's a smart money cube I'm looking at. Price should capture that liquidity, come to the smart money cube, and then we should head down. This becomes your external liquidity. This is external liquidity downrange, and this is also the external liquidity on the daily. This external liquidity, the last low. Because now the daily range is high and low. But in this move that broke structure, this is a high, this is a low. So this is downrange. This downrange becomes your external liquidity, sorry. External liquidity 3. Okay, yeah. That becomes your external liquidity. You can take for profit. So if you get an entry around this place, either 50% or the open, depending on your, just have your stop loss around here. You can choose to take first profit here, and then you can take second profit here. So that's how you trade liquidity. It helps you identify which move is valid, what smart money is doing. Just take from the high to the low. Once it is above 50%, remember 50% and above is our premium zone while we are selling. So this becomes our internal liquidity, and then we want to start looking for entry after the internal liquidity. So I'm not going to play here. I want to sell from here. No. I was looking at buying here, price close above all this. These are just liquidities cleared that were built while coming down. Just cleared, they came all the way this place. And fine, if you have played that to the lower time frame, that's okay. I played that before. I showed us a break of all this, got an entry here, 1 to 3 was captured, and we are off. You can see double bottom. This is double bottom as well, to tell you that price is going to come down. So this is what I'm currently looking at for 25. Let's go to, let's check another asset. Let's look at Boom 1000, please. Boom 1000. That was a question. Please, can you draw out the lower high and lower lows on that chart? Why not? We can. We are bearish. So let's start from here. High. The price gave us a low. So we're expecting to be a lower high. Expect a lower high around here, and then we go for a lower low. This is the whole structure I can see. Remember these 4 hours, except if you want to play 50 minutes, you have this break of structure here. You see how price weak this out break of structure, and price came tapped into that institutional candle straight away. Let me open it. This was a break of structure. You can see how price closed below this. This candle closed below, and price went tapped in. Obviously, this has been closed. This imbalance has been closed. There's nothing here price should come into. And price gave us this. This is a double top. Price didn't really do much here. So there's still a cube here that's not been an institutional or smart money cube that's not been captured. So this is my high. This is my low. Now I'm going to have a lower high here to have a lower low down. That's what I see here. That's what I see. So let's go to boom 1000. Let's see boom 1000. I really don't want to mute or so. You can just unmute yourself if you want to. Unmute yourself. If your background is noisy, just mute. Okay, let's look at boom 1000. We've had a lot of issues with boom 1000. We traded it, it hit stop loss, and let's find out what the challenge is. We know that daily we are bearish. We are bearish. There was a low that was captured here. So we are expecting a reaccumulation below the lows. So let's go to 4 hours. Let's see. Let's go to 4 hours. Let's see. So on the 4 hours, you can see how price is coming into all of this. And price give us this. Low, high, lower low, lower high, lower low into all of this. And now price following this structure on the retracement move, because you can see a huge imbalance around this place. Yeah, you can see a huge imbalance coupled with a smart money queue around all of this region. You can see a huge imbalance around this region. So let's go to 15 minutes. I want to show something from 15 minutes. Let's try to trade the 15 minutes or 1 hour structure so that you see what price has been doing. We know we are retracing, so we are bullish on the retracement leg. All right. So let's see. This will be our low range, and then price came, gave us all of this. This became our top range. So when price gave us this, maybe I should make, let's go to 1 hour, 1 hour, 1 hour. 1 hour should be cool. So price gave us low range, down range. This is the down range, this is the up range. As price broke above here, we expected price to come down, which price did. But before price did that, notice what happened here. Price gave us this, gave us this, gave us this. This was internal liquidity. Now went up, captured this. So as price was coming down, it's just to draw out your fee from the low to the high. Let's know where we're going to enter. Let's look for our internal liquidity. There was an imbalance here. That's what made me not to play this. But below 50, this is 50%. Do you see this? This was the internal liquidity spotted here. It's just immediately below 50%. Internal liquidity was spotted there. So that was internal liquidity. And then here becomes where price should come into. because this high has been broken, and this was created. So this was a high, a lower high, a higher low. So you saw internal liquidity was captured beautifully. Price traded into all of this last push down, and then price broke above this. So here now becomes your external liquidity. Sorry. This becomes your external liquidity. You just go over the video again, you understand what I'm saying. So if you had gotten an entry from here, you should look to take profit from here. Let's say I just played, I'm not refining, I just played the open, and then I took my profit from external liquidity. Because once internal liquidity is captured, now we have permission to go for external liquidity. This was a 1 to 3. Okay, that was a 1 to 3. The price came, gave us another high. So we have currently, we're still trading the H1 structure. Currently, this is the high range, and then this is the low range. If I remove this, this becomes our low range. All right, so arrange though. I'm not writing on everything because we know this was a range high on external liquidity to be captured. I'm not writing everything, but at least you know what I'm saying. So let's have this. Price now give us a range high. So if price start retracing, why was I looking at selling from, or why am I selling? Because I think I'm still on this trend. I saw this break here on this retracement leg. Look at it. It happened here. It happened here. Wanted to get in, but price came and pushed everybody out. I never gave us that entry. You will not always get that entry. No. But if you get it, you play it. Price came, turned everybody to liquidity, and then we rallied down. But I knew we're still bullish on this retracement leg. So price gave this. So I was waiting for price to come into all of this. So that you saw that entry. So I'm still expecting price to come down. Now, if I want to find out where is my internal liquidity first, I'll just bring out my feed from the low to the high. I'm going to find this as my internal liquidity. So I expect price to come and capture this. Internal liquidity to be captured. This is internal liquidity. I should expect price to come and capture. This is a form of double bottom here. You can see like a double bottom, and this imbalance right there. So probably price should come here to all of these. I will not be expecting price around this place. Maybe all of this. Price can just weaken to the balance and then we just head up. But this is what I'm looking at. If I can sell down to this place, and since I'm selling this retracement leg, I want to take profit from the clear of the internal liquidity. Then if I get an entry from here, I want to take profit from here. Bearing in mind that there's an imbalance here. So price might just enter into the imbalance, and once price comes into the imbalance, we should head down to sweep this. This becomes our external liquidity. Once price is retracing fully, then this becomes our external liquidity. We should come and clear this. So that's just the concept of internal liquidity. Draw out your fib. Your internal liquidity will rest within the 50% region. 50% region. So I'm still expecting this to push down. Do we also need to draw the fib? Let's say on the retracement deck. Yeah, sure. Yes, you have to still draw the fib. The fib is for extra confirmation, so it's not too much. If you draw the fib here, once internal liquidity is captured, price already at the discount zone. So once you see an evidence on the lower time frame, why not? Just take it. Or if the stop loss is within your risk appetite, why not? Just take it. But if I want to be conservative, I think price should just come here to 786. There's a cube in that place that aligns with an imbalance. This place is balanced. But there's a smart money cube around here that aligns with the imbalance and is on a fib level, 786, which is an extra confirmation. So price can come here, go here, or price can enter the imbalance above first, and then we go down. You get it now? So that's just how to, there's an imbalance here, there's a smart money cube there. That's how to just, price can just come here and then we go down. The price can come here and go, but I'm just trying to play what the chart is saying. You can't really predict when the market will make a turn. That's why we wait for accumulation and redistribution. If it's there played, the stop loss will always be minimal. Then if it goes your way, take a 1 to 3, you make 3 times as that. So let's look at maybe another asset. Let's look at another asset. Oh, is my system season? Okay, let's look at another asset. Which do I need to send all this one? Do I need to send this? Hey farms, are you there? Do I need to send this to the group? All right, I should. Let me just send to the group. Let me send to the group for those that are not on the call.
Hello?
Yeah.
My network is having a bit challenge, so yeah, can you hear me, guys? Can you hear me, guys? All right, I'm sending this now to the group. My network is a kind of messed up.
Yes, we can hear you, sir.
Okay. So let's just check another
Yes, sir.
asset. If we get an entry here, you know that this becomes your external liquidity, which you should be looking, which we will be looking for. We'll be using this as range high, which becomes our external liquidity. This would be your external liquidity. You get an entry from here, then you can look to go up. All right, which other assets should we look at? Maybe just check, let's check crash 1000.
So let's look at 51S.
51S, all right.
51S.
Okay, we had the markup there from the last call. We had the markup there. I'm still optimistic that it should play out. I'm patiently waiting for that to play out. Yeah, that's what we're waiting for. Okay, it's 51S. All right, let's go back to the daily. Let's see what price has been doing. Let's just analyze from the beginning. And network is a kind of messed up tonight. So it's not sharp.
It's everywhere. Anywhere I am.
It's to load the page, it's a problem. And check files, the files will do it. That dropped 25.8 just now. Okay, I think I did. Let me send it here. I want to keep an eye. Let me just send it to my resources. I want to keep an eye. I'm interested in that trade. Yeah, I am. Okay, 10-1. Okay, 51 has loaded. All right, remember we were looking at price taking these highs. Yeah, we said so. Because this was the break of structure that we're looking at. And then I said this was internal liquidity. I did say so in the last class. Let me draw my fib out from here down. See, this was internal liquidity. Please, okay. I thought I allowed everybody to unmute. You can unmute, sir. All right, sorry about it. So we're looking at price should come and capture this internal liquidity. If you remember from our call, we had all of this break, and then I did say that this was internal liquidity. It's going to be captured, and you can see that price has captured it. Internal liquidity. Why did I say it was internal liquidity? Because it was just above the 50%. It was just above the 50%. So though it is on a discount, or sorry, premium zone, but I still feel that price has something to do in this move. Remember, we're expecting price in all of this. We're expecting price in all of this. Yeah, 50%, we're expecting price. So we want to see what price will do within 50% of this. Yeah. So now you can see it has been captured. But on the retracement move, on the daily, this is our top range. For a broken structure to the downside, this becomes our down range. So that range low, while we are going down, we're going to use it as external liquidity. So internal liquidity has been captured. Now what we're expecting is, let's see, an evidence, possibly on a 1 hour around this zone, on a 1 hour. So this was the retracement structure. It's a retracement structure. High, low. So now price is coming for the lows. So price should come to maybe these lows, somewhere around here, and then we head inside. So let's go to 1 hour. Let's see what we can find within this zone. But I think I expect price to still come higher. It's a form of equal highs. Look at this touch here, this touch, all of this touch. These are equal highs. Let's see if we can get to 1 hour, 2 hours. So you have your questions. You can start dropping your questions. I'll be bringing the call to close any moment from now, and then I'll see how to get the video across to us once light is restored. Network is really messed up. If you can hear me, let me know. You can hear me and you can see my screen, right? Yeah, you're
yes,
back.
correct.
Welcome back. Sorry, the network is messed up. Okay, so this is 4 hours now. Looking at the range of 4 hours, or the structure rather. This was the break of structure. This was the break of structure, all of these. This would have been the first entry. Nobody got that. So this was the high, the low. Price gave us a high. Price gave us a higher high. Created this low. Created this. Price came, swept this as liquidity. And then so this is no longer valid. It was swept as liquidity from here to here. Price, let me measure that, please. So from this to all of this, yeah, it was internal liquidity. Price came, captured it with a touch, and then liquidity was captured. Price traded into all of this, just a touch of this, and price left. So now price came here and has broken this high. So this becomes your next entry. And if I bring this, there is internal liquidity around that place. You can see this week. If I capture my feed from the lows to the highs, you can see it's below. It's just the major move that is below 50%. So price should capture this internal liquidity, trade into 78.6, and then you can see all of this double top around this place. Price should capture all of this double top. These are money seated here. A lot of tons of liquidity seated around this zone. Then we can now be looking at the 78.6. A lot of money. All these are liquidity seated around this zone. So that is what I think it was Mr. Was that okay, Friday, you asked for 51 days. So this is my take on 51 days. This is what I'm seeing, and this is what will happen. Yeah, I think I can say that this is what will happen. So external liquidity has been captured here. Price need to come back, capture internal liquidity, give us entry around this place. Then we capture this money here, trade into 786 of the fib level of the entire daily move, and then if we see a break of structure within that zone, that will be cool. That will be fine. That'll be fine. You can't call this a break of structure because this is the last high. You check the body. The body is more than this. If this has pushed up and then price now close below, we'll call this a break of structure. So this is not a break of structure. Price we capture this week, that is, you can see an imbalance. Let me remove this feed level. You can see an imbalance clearly around this zone. You can see it, right?
Yeah. Yes.
You can see an imbalance around
IPA.
Yeah, there's fair value gap around that zone. So price should come to that fair value gap after capturing this internal liquidity, and then you can just go down. So you want to annotate or write on it, you can, why not? Just have that.
Yes, I'm coming.
So that is it. This is what I'm looking at. I'm still, my eyes are here because 51 is, I've not really had any nice entry on it this year. And you know it moves very well. It's very volatile. So if you get an entry around this place, then you start taking profit. You take profit from here first, profit, second profit from all these structural points, and then we can now take this one, which is the low, the range low. We can now take the range low while we are coming. So while you are coming, all the structural points before becomes your point of taking profits. Take profit from this low, take profit from this low, take profit from this low. So the problem of where should I take profit? How do I close my trades? Just take your 1 to 3 first and then allow the rest to run. As the rest start running, you can start breaking even, take your profit, take stop loss in front, price goes down, take stop loss to the next structural point. So if your stop loss, price has moved to this place, stop loss can come here. If price closes up below this, your stop loss can come here. Price closes below this, your SL can come toward the structural zone. So that's what I'm looking at. Let me send this out. If you have any other question, please just drop it so that you can get used to it. And then I have to get the video across to us once I have like installed. Thank you so much. Thank you so much, everyone. Thank you. We're going to be having trade reviews on Friday, so I don't want to jump, but that's tomorrow. We'll have trade reviews. You show me the trades you took for this week, because I know you took a lot of trades. You had a lot of setup that played out this week, like a lot. VIX 10S analysis, VIX 10. A lot of setup played out. I dropped a lot of them, and a lot played out, like played out. So let's keep an eye on this, guys. Let me see. It's 10. I really need to shut that now. Okay, 51%. Let's see if we can get 10. Okay, VIX 10. I saw somebody, was he? Okay, I was buying VIX 10. Yeah, I'm still in this buy. We have a common, this is the daily or the 4 hours. You can all see how price gave us this break of structure. Sweet. So we have been looking that price should come to 50% of all of this move. 50% of all of this move. That's where we've been looking at the price should come. So we've been anticipating that price should come to there should be a break of structure within this zone. That is when I'll be interested in selling. Yeah, we're interested in selling. This happened, this becomes my internal liquidity. So let me draw my fee from the high to the low. What can you find? This is 50%. This is the last structure before, after 50%. So to me, I take this as my internal liquidity. Yeah, this is internal liquidity. That's why I'll still take this one for. Internal liquidity. That's my internal liquidity. So I want price to come and trade into all of this. Maybe 78.6. And then there should be a play around here that price is coming to. I don't know. Or this is what I'm looking at. So let's go back to, all right, the 4-hour structure now. The 4-hour structure, price has been giving us all of this move. High, a higher high. Now price gave us this higher low. Price came and gave us a higher high. So I was looking at price to capture this liquidity coming to this imbalance. So if I zoom this, and I capture from this low to this high, you see that was an internal liquidity captured. You see how it was captured beautifully, and it was in a form of double bottom. That's internal liquidity that was captured. Internal liquidity was captured in that zone. Right. Yeah, was captured in that zone. You can see that the price came into this IPA. You can see that IPA that was there. The IPA was there. Fair value gap was there, or IPA, whichever one. I would say the price weak down and is currently going for external liquidity. Liquidity seated above here. External liquidity. That's what we should now be looking at to take price from here. So I'm still holding on this trade. I'm still holding on it. I want price to come capture this because internal liquidity has been taken. Then we should look to take external liquidity since we are bullish on the retracement leg. Yeah. So after that, we will capture this internal liquidity. And once internal liquidity is captured, we will have an evidence here to come and capture all of this. This is external liquidity now. Why coming down? All of this. External liquidity, why being bearish? All of this. While we are retracing, we'll capture that. Do we need to draw range low, range high? Primarily, your structure and trend should be on weekly, daily, and 4 hours. Then you can now begin to trade the inner structure. So you saw how I drew. I know that we are on a retracement leg. So I won't draw range high here, range low. That's the daily range high and range low. But on the 4 hours, this is my ranges. Range low, range high. Price came into all of this. If I draw my feed from here, price came, captured this liquidity by 50%, traded into this institutional, there was an institutional candle here. And you see If you are noticing, once there's a capture of the internal liquidity, there's always a fair value gap. You can see it has always been in all our entries, right? You can see I spoke about this in one of the videos. You will find out there's a fair value gap below, or sorry, above entry. Fair value gap above entry. If we are now bearish, fair value gap would be above or before. Yeah, would be below if we are bearish. To be below, entry at the top. But since we are bullish, fair value gap is always above entry. So we capture this internal liquidity here, capture all of this internal liquidity, and then traded into this smart money cube, traded away. Once this external liquidity has been captured, what do? We needed to come into internal liquidity. And price can give us this move, capture this. These are all structure within structure, or ranges within structure. This is H4 retracement structure inside our daily structure. We look to sell, but we are catching the buys up before we can now sell down. Last question.
Okay, quick question.
Go ahead, sir.
Where I noticed when price is retracing back into that 50% zone, it's capturing the internal liquidity and it's reversing by the fair value gap area. So price won't necessarily come all the way back down and test the order block. It can reverse at the fair value gap area once it's taken internal liquidity.
Yes, once price has taken internal liquidity, it will feel most of the times, I don't want to call percentage, but most of the times it will feel the fair value gap and tap, it must tap the other block. Check. This was the fair value gap completely filled. And then there was a tap. Let me open it. My system battery is running down. So you can see it. That was a smart money cube. If I go to daily, you see it clearly. This is a cube. It came and tapped it. Fill this fair value gap completely. Now price was coming. What did price do? Price came into this fair value gap. It didn't fill it completely, but there was what's it called? There was a smart money cube here. It didn't tap into it, but it filled almost over 80% of the fair value gap. Now when price broke, so price can return. You know, fair value gap, institutional candle, mitigation candle, they are all institutional or smart money plays. What it simply means is that there are a lot of volume in that candle that made the market either leave a gap or that sponsored the move. So most of the times, smart money will come and just close their orders. They might not close 80%, they might just close 50% or tapping at the open. Why you're expecting price to come to all of this, and they can just, once they mitigate out of their position, they are good to go. So it's your responsibility to be able to, first of all, spot your internal liquidity, wait for it to be taken. Once internal liquidity has been taken, wait for an evidence on the lower time frame, possibly 5 minutes or 1 minute. Possibly 5 minutes, 1 minute. You saw the VIX 75 that you took. I told you it was beautiful. There was a capture of aftermarket growth structure. The fair value gap was filled, and then price just returned into it, tapped into the other block and left, ran away. So that's just the same thing. Price came into the fair value gap. If I bring this out, you will see it just tapped. Just tapped. You see, just weak. This was the weak. Let me push out the fair value gap. You see, it just came, close the fair value gap and left. It really didn't come to the other block because this was the other block here. This was the other block. It didn't really come to the other block. It just reverses from the fair value gap after filling it. And price seems to take a move off. So let's go to 5 minutes. This is the last one I'll do, 5 minutes, and then if it loads on time, I'll do this. Okay, look at what happened. Are you not seeing that distribution? This was the 5 minutes. Price came a low, a high, and price closed below all of these lows. So that was the sweep. And since price has swept, price came, broke this structure, and then your entry was simply on this last move, this whole move down. So if you had gotten an entry on this, it would have been some good percentage up. So you just want to wait for pricing, either the fair value gap or the mitigation candle. Just go to a lower time frame and try to find out what is price trying to do. If I put this on a line chart, you will see it clearly. A high, sorry, a low, a high, price K. This was the lower low. Price gave us a lower high, gave us another lower low, and price closed above. Price had to find its way down into all of this. That was just the move. So I'm on this. I'm currently on it. Yeah. No, I don't think I got it from here. I think I entered from here. I can't remember. Yeah. But if you had entered from here, this will just give you a very good mixed reward, like sweet play. I saw it is already 1 to 6, but I know I'm on this trade. So that's just what you want to do. Thank you so much, farms, for hopping on the call. Once light comes, I'll be able to convert the video and send to us. Thank you so much. I love you guys. Peace out.
All right. Cheers, Moses. Keep
Yeah,
well, guys.
bro.
Bye.
Thanks. You have the video to watch again and again. It's just a simple concept, but it helps your entry. It helps your
Thank you,
entry.
sir.
Helps your entry to be more refined than taking unnecessary losses. It helps.
100%. I think I'm just gonna be practicing this as drawing out range highs and lows for the next like few hours, the next couple of days, because that's the foundation, understanding the structure and the
Yeah,
ranges, because
the
then you can
ranges.
always trade
Within.
within the ranges. Yeah.
Thumbs up. You are right. 100% correct. Mr. Friday, thank you so much.
Thank you, sir.
Just keep doing what you're doing. Keep practicing. Everything, the dots will connect. Believe me, it will connect. The dots will connect. They will. Just keep practicing. The dots will definitely connect. Thank you so much for hopping on the call. Have a good night rest. Bye.
Well done, sir.
Yeah,
Cheers,
cheers.
guys. Bye.
Cheers.
Yes.